A rocky start. U.S. stock futures began the week deep in negative territory. This follows a volatile period marked by trade tensions and economic uncertainty. Investors are looking for signs of stability. All eyes are on upcoming corporate earnings and the Federal Reserve meeting. The Dow Jones Industrial Average futures plunged by 280 points. The S&P 500 and NASDAQ 100 futures were also down. This signals investor pessimism about the week ahead. Factors contributing to the decline include President Trump's trade policies and concerns about global growth. The ongoing trade war with China continues to rattle markets. President Trump's recent statements suggest that a resolution is not imminent. The uncertainty is weighing heavily on investor sentiment. The market is looking for any indication of progress in trade negotiations. Despite the gloomy start, some analysts point to positive economic indicators. The U.S. economy remains strong, with low unemployment and steady growth. However, the trade war poses a significant risk. Investors will be closely monitoring developments on this front throughout the week. Trade tensions simmer. President Trump's stance on trade with China remains unchanged. He stated that he has no immediate plans to speak with President Xi Jinping. This comes despite growing pressure to resolve the ongoing trade dispute. The president emphasized his commitment to securing a fair trade deal. Trump argues that current trade practices are imbalanced and hurt American workers. He has imposed tariffs on billions of dollars worth of Chinese goods. China has retaliated with tariffs of its own. This tit-for-tat has created uncertainty for businesses and consumers. Despite the economic fallout, Trump shows no signs of backing down. He believes that his hardline approach will ultimately yield a better deal for the United States. However, many economists warn that the tariffs are harming both economies. The trade war is a major source of uncertainty in the global market. Businesses are delaying investments. Consumers are facing higher prices. Until a resolution is reached, the trade war will continue to cast a shadow over the economic outlook. Hollywood under siege. In a move likely to further escalate trade tensions, President Trump announced a 100% tariff on movies produced outside the United States. This unprecedented measure is aimed at protecting the American film industry, which Trump claims is facing unfair competition from foreign productions. The move has sent shockwaves through Hollywood and beyond. Trump's decision comes amidst concerns that Hollywood is losing ground to foreign competitors, particularly those offering generous tax incentives and subsidies. Countries like Canada, the United Kingdom, and Australia have become increasingly attractive destinations for film production, drawing away productions and jobs from the United States. The new tariff is intended to level the playing field by making it prohibitively expensive to import foreign-made films. However, the move has been met with skepticism and concern from within the industry. Critics argue that the tariff will stifle creativity, limit collaboration, and ultimately harm American consumers, who will face higher prices and fewer choices at the box office. They also point out that the American film industry benefits from global partnerships, and that isolating itself could have unintended consequences. The impact of the new tariff remains to be seen. It could lead to a resurgence in American film production, but it could also trigger retaliatory measures from other countries, potentially escalating the trade war and harming the very industry it seeks to protect. The Fed's Balancing Act. The Federal Reserve is set to begin its two-day policy meeting on Tuesday. Investors are eagerly awaiting the outcome, which will have significant implications for the market. The consensus among economists is that the Fed will hold interest rates steady this time around. Despite pressure from President Trump to cut rates, the Fed is likely to err on the side of caution. The U.S. economy is still growing, albeit at a slower pace. Inflation remains relatively subdued. These factors suggest that there is no immediate need for a rate cut. However, the Fed is also mindful of the risks facing the economy. The trade war with China is a major source of uncertainty. Global growth is slowing. These factors could potentially push the U.S. economy into a recession. The Fed will want to keep its powder dry in case it needs to act later in the year. Fed Chair Jerome Powell's remarks on Wednesday will be closely scrutinized by investors. Powell will provide his assessment of the economy and offer clues about the future direction of monetary policy. His comments could either calm or further agitate the market.